So let's really get this into perspective. This is the United States dollar against the yen. I know this is going to 114.23. This is a 15-minute chart, so it's probably going to R5 or R4. I'm only going to use 1 mini, not more. Okay, I know this is going up. From what I'm seeing here, I'm seeing, of course, resistances and internal pivots. All right, now I could simply, it's really that easy. The market is right here now at that resistance. It's going to fall back to this resistance, or it's going to be fall back somewhere between both resistances. So I would expect a bounce at this point, 113.49, 113.5. okay, so I'm just buying 113.5. I will take out next time this resistance and go for the next resistance, 114. This is the 50 points that I need. 50 points multiplied by 0.9 equate to $45. Equate, that is on 1 mini. Equate on my account, if it's a 10K, equate to 0.5%. Remember, I want to do that 20%, so every day we have to do this on at least 2 issues. 0.5% here and 0.5% there makes it, adds up, makes sense. Okay, so now it's very easy. Now I know that this trend is going up. I have the technical picture, I have the entries. All right, I'm not fortunate to be at the right time there, but I know this is going up, not down. So I will just buy R2, 113.5. okay, I don't have a stop. My stop should be actually at, I don't have a stop because my risk management, which I'm going to indicate now, doesn't need a stop. So I'm buying 113.5. okay, only 1 mini. All right, I know there's some kind of a longer term uptrend, so I'm on the right side of the direction. If the market should fall, all right, I will do technical analysis. This is where technical analysis come in. Remember, I only entered even 1/3 size or very small size, half size or less than half size. Okay, so how big can the fall come? All the way down to 38.2, all the way down to 23.6. I'm going to be adding at 113. If the fall goes down, I'm adding, I have projections now from the beginning of the move all the way to the top. These levels I know are never going to be seen. If you're going to be trading them, you may not make any money at all. All right, you want to make that 1% on a daily basis, then we just buy 113.53, go to 114. all right, towards the end of the day, go even to 113.76, $25 or $20 quickly, and so on, and recur it if you wish twice to do that 0.5%. Now, how am I protected if the market should fall? Okay, we're looking at 113. Okay, so I'm gonna add another 1 mini at 113. I'll be averaging 113.25. I know I'm on the right side of the direction. I'm even making more money. I'm now having 2 minis. I only have to go 25 points to make that $50. So I'm going back to the market top, 113.5. I'm gonna make it probably. Everything adds up. I made my 0.5% on that issue on a daily basis. Okay, so as now we would consider that we can implementing this technical approach. That's why we waste so much time on it on Mondays. Okay, so that the technical picture is correct. So if the technical picture is correct, whatever we are trading inside of that technical picture is probably valid. All right, and correct, and we no longer have to adhere with exact limit entries at specific levels. If we are really on the right side of the trend and we want to do consistent daily intraday trading and intraday profits, then we can just implement internal resistances and supports on the 15-minute charts that are aligned inside the trend that is shown on the trade management chart and on the technical picture, and just go for the levels, accumulate across the board. All right, and then you can of course accumulate at least maybe 20% per month. Now if you have an account, or of course we all do have accounts, all right, you can have it segregated into slots, meaning into 1%. It's 1%, right? Okay, so these 1%, you will find here that you have 2 minutes. You're buying 2 minutes, okay, for this current trade, and these 2 minutes just looking at risk, usually we have a percentage here. I'm just using on these 2 minutes 1.38%. So I'm using 1.38% to make 0.5%. It is normal, and actually it is valid because it's a short-term intraday trade. I have to stand out of the adverse volatility, and I have to be able to time his money again. I have to be able to accumulate. Anyway, even if I get hit that 1.38%, this is the good thing about it. It's only 1.3% that I'm risking. That's why I will risk it continually and redo the trade several times a day. I can do it 3 times over 2 days. I will cover, of course, that risk of 1.38% because I have done 0.5% multiplied by 3. Now, in actual swing trade planning, the academic approach would indicate that we're going to target 114.1 and we're entering only at 112.8, and we're going to be rewarded by $250, $248, 2.5% of your 10K account. Sounds good, sounds excellent. The risk reward is 1 to 2, but of course it's too academic, and you would only get to do just 1 trade probably a month, or 1 trade in a fortnight, 2 weeks. If we get to trade it, we have to be in very good focus, and we have to be very attentive throughout the whole duration of the 2 weeks in order to get that entry correct, and you may not even get the target at 114.1. You know the story. Okay, so we want to shift a bit to this kind of money management or this kind of account management. Presumably we are standing on something solid. We are standing on solid information and not speculation. We would call this information if we know that there is this kind of move, that the momentum is there now, all right, and that there is a fundamental driver, and so we're just making use of the information.